Hey traders, checking in on the stock market today. So overall, the bulls are keeping their control. Microsoft bullish reaction to earnings after hours is lifting the tech sector higher into all-time highs in extended hours. And tomorrow is Fundamental Wednesday with another slew of earnings and the FOMC at 2 p.m. Eastern. Let's see what the setup is heading into these fundamental events.
Introducing the Chart Guys Swing Report, a weekly digital publication that uses technical analysis to identify long-term market opportunities. Understand the market from a swing trade perspective. Follow institutional money as it rotates from sector to sector, and make the most of the Swing Report's weekly trade opportunities, with key entry and exit levels provided. Performance is tracked and updated weekly. For more information, visit us at chartguys.com. Now, let's check out some charts.
So let's first look at extended hours. A couple of things. QQQ and extended hours with a big move up in response to Microsoft earnings. That's blue sky breakout levels. It's leading to SPY being about $1 higher in after hours. And of course, still getting the headlines. GME is now $2.25 in after hours. This is fascinating what is happening here. And the SEC is going to come out with a statement eventually, and curious to see how they address this. But what it is doing is just ripping open and exposing how massive a giant game this is. And it's retail started this, but we traded, what, $24 billion today? This isn't retail at this point. This is big money smelling blood and going for the jugular in terms of potentially bankrupting a lot of hedge funds that were short GME. This is one of the most massive short squeezes that you will see, and it has absolutely nothing to do with fundamentals. So that's why I love it being a technical trader, where fundamentals has mattered very little to me for the last 10 years. And now the world is seeing, wait a second, this has nothing to do with earnings expectations. This is just literally a play to squeeze shorts and just run a move up to insane levels. And I honestly, I'm not going to lie, I love seeing the old dinosaurs that have had a firm grip on this space for 50 years and used it as their personal piggy bank to create wealth, being handed their you-know-whats in terms of just not realizing that the millennials don't care. They're just going to buy it. Do not buy this at these levels. I'm going to attach the thing that I forgot to attach in yesterday's video, just talking about how this will end. And you could watch right now on Wall Street Bets on Reddit the massive euphoria that you're seeing, and then go back there in a month, and it will be massive despair. And there will be people that are down 40, 50% and have no idea when to sell. And we're essentially conned, I don't know, conned is the wrong word, but misled into buying at insanity levels. And they're going to learn a lesson a really hard way. But boy, is it entertaining in the meantime. So curious to see how this continues to unfold. Because if this goes unpunished, in the sense that the SEC says, well, it's free speech, they can do whatever they want, this is not market manipulation, it's going to happen again and again and again, and they're just going to go after really high shorted names. And here we are down 20% in just a couple minutes after hours. So insane volatility. And again, just a fascinating case study of market psychology and the workings of the market. And we already saw one hedge fund have to be bailed out with $2.75 billion, and that was before today. That was pretty much when the price was 50% plus lower. So it's who needs television when you got this going on? So back to the broader market. SPY bulls in complete control. They held the hourly uptrend. We had an hourly support at the end of yesterday at 282.43. Morning profit taking, hourly higher low maintained. We saw a low of the day break right into the close, but then again, right when the bell rang and Microsoft earnings came out, completely erased that little bit of weakness. So essentially, the bulls have their full short-term control. We would have to break the low of today to be looking at the low of yesterday, support level back in play. But as of right now, the after-hours session is favoring the bulls. So again, we have to be watching Apple, Facebook, Tesla earnings tomorrow after hours, and the FOMC 2 p.m. Eastern. IWM, pull back today, closing near the low of the day, inside bar. If we see a bear break of 209.55 short-term support, it means zoom out. Weekly consolidation will likely be underway at that point, and it will be a loss of short-term momentum. So all about 209.55 from here. QQQ. So again, bulls up after hours. A little bit of a pullback now, but all-time highs. So today was a daily inside bar, but after hours, we're getting that all-time high push. Low of today will be a short-term support level at 327.22. But again, bulls have control. XLV all-time high today on the gap up open, closing near the low of the day. If we see a break of 117.42 support, again, just like IWM, it'll be a loss of short-term bullish momentum, and we will zoom out and scout a weekly higher low, as weekly consolidation will be underway if we lose that daily higher low. Financial sector, weak bounce attempt. So the hourly trend has to change. We saw a higher open, so the bounce went straight from the low of yesterday into the higher open, hourly higher low midday, no confirmed hourly trend change, bears into the close. So if we cannot change the hourly trend, we're not going to see any daily bounce follow through, and we are scouting a weekly higher low bigger picture. And again, the broader market bulls would love to see continued consolidation in XLF while QQQ keeps running. And then when QQQ starts pulling back, XLF setting its weekly higher low to try and offset some of the weakness that we see caused by tech sector healthy consolidation, essentially. Biotech sector new all-time high today, but also confirmed an hourly downtrend into the end of the day. So key support will be 148.81 if the bulls are going to maintain their daily uptrend and maintain complete control. SMH closed near the low. So some of these sectors are showing a little bit of short-term weakness. If SMH breaks 236.97, we're looking at the daily higher low of 232.71, but we'll be losing the daily EMA 12 for the first time in about a month. Solar sector consolidating, need to form a higher low compared to 106.88. The marijuana sector is finally seeing weekly consolidation. I will be scouting entries. I'm watching for first hourly oversold conditions if we see some weakness tomorrow. And watching for a weekly higher low in this sector. And the VIX opening higher, closing weak. And that's actually probably factoring in some after hours action here. So yeah, we closed and then we're dropping here with the Microsoft earnings reaction leading to higher markets. So overall, the bulls have complete short-term control. And again, it's very worth noting that GME and SPY topped and pulled back really hard yesterday at the same time. Watch that tomorrow. If GME tops and drops 40%, watch how SPY reacts. I'm very curious if there's going to be correlations and bots all reacting together. Something to be paying attention to. And you might be looking at that and saying, what in the world does GME have to do with the broader market? But with this interconnected new technology market that we have these days, bots and algos go wild. And again, if you just look at yesterday, GME topped out at 159.18 and we topped out at 10:45 a.m. and we dropped down for 30 minutes. Huge pullback of almost 50%. And SPY at the exact same time rolled over and dropped for about 35 minutes. Absolutely connected in my opinion. Watch for it again. Let's see if GME marks consolidation. So on to commodities. The dollar. Bears want to see a break of 90.05. A break of 90.05 would confirm a daily downtrend with a head and shoulders pattern here, and that would increase the odds of a weekly bear flag. So all about 90.05 short-term support and our new resistance level, 90.61. Metals just sideways, 2 daily inside bars in a row. Close to a bear break on gold, but not there yet, just real tight range. Break is imminent tomorrow. Silver, same thing, holding sideways. Broke resistance with zero follow through, pretty much a daily inside bar, 2 days in a row here. And miners inside bar on the daily. If we see a bull break of the metals, we'll be looking at resistance of 36.32. If we see a bear break of the metals, we'll be looking at this double bottom at 34.47. Oil, anything under 53.83 is a daily lower high. So we are in a daily downtrend. It's just a downtrend that has no bear follow through at this point. And it's a weekly bull flag. The inventory report is tomorrow. If it's a bullish reaction, we look to 53.83 resistance. If it's a bearish reaction, we look to 51.44 support. The bulls will need to confirm a daily trend change back in their favor for that weekly bull flag to have follow through if it's going to confirm. But the bear break with a lack of follow through last week is what is standing out to us. Natural gas bulls got a bit of follow through. 4-hour uptrend still intact. Have to lose the 4-hour uptrend for our daily lower high to be set. Lots of space for that daily lower high, but also creating the space for that daily higher low to try and form once we top out compared to 2427. Let's check back in on GME one more time. I've been trading it with very small positions, and I actually nailed the top with a put yesterday with a very small position, and it didn't go up as much as you would expect, but a nice 35% win on a very small position for a half-day maker. So I'm just fooling around with it. I would not put any real capital at play here personally. Way too much gambling. I would rather stick to my base hits that's been consistently working for years than try and jump in on something as insane as this. Because again, when that top is hit, when the top is hit, we will drop 40% very, very quickly. We did it yesterday. It just wasn't the top. It was a top. So keep an eye out for the SEC to comment on this. Keep an eye out for the veterans of trading and investing and financial advising to be baffled and to scramble a bit. And there is a documentary to watch, The Pit, about when traders used to be in the pit screaming at each other like monkeys. And a lot of them, the vast majority of them, were put extinct by the change to computers. And it is going to be, as technology continues to exponentially change, the trading game will exponentially change as well. No fees for trading, big game changer. It's just going to keep happening with, you have to adapt. You have to be agile. You have to be staying on top of technology, and you have to adapt or you will go, like the pit traders, extinct. In 5 to 10 years, this game is going to look very different than it does right now. So that's one thing that I like about it. It's constant learning. You never stop learning. You never stop observing. And it's never a dull moment. Certainly the last few years. We'll see what tomorrow brings. Have a good rest of your day. Do good things. And we'll see you then. Good morning, everybody. It is Monday, January 25th, 9 a.m. Eastern. So let's talk a little bit about the market first. This is the most euphoric market that I've ever seen. I've seen plenty of euphoric sectors, so I know how to play euphoric sectors, and that's going to help me not get crushed by this euphoric market. And we've heard, over the months more and more about retail traders and the herd being brought into the market. And I'm seeing that more this past weekend personally with friends than I've ever seen before. In terms of, I gave the example in the weekend video about my friend with GME. He struggles to pay rent, and he's got his Christmas money in GME, and he is reading Wall Street Bets, and it's just a recipe for disaster for so many people that don't know how this game is played, because the way that these euphoric moves end is fast, hard, and out of nowhere, and it leaves newer traders completely stunned, deer in the headlights look. And that is going to happen in this market with these crazy names that are surging higher. It's just a question of when. So I'm not looking for it to happen today. It possibly could happen today, but it's the kind of reminder where we must protect our gains, not forget our rules, not get sloppy because of this market environment. I'm going to be scouting some bearish entries later this week, whether it's, I don't know what day I'm going to be scouting them, but these euphoric moves are not going to just continue. It's also nice to see that we're seeing a shift in how these markets work. Fundamentals are going out the window more and more, and we're just seeing groups of people run these names, cause short squeezes. GME is obviously the biggest example of that. But again, it's opportunity, absolutely. There's going to be a ton of volatility in both directions. The gains that you see are not real unless you press sell. And these names, when they top out, will drop 20% very, very quickly. So just keep all of that in mind. That is how euphoric markets and sectors top out. Fast, hard, out of nowhere.